What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily and weekly updates as well to get you prepared for the day and the week ahead in this glorious market. So, as per the usual for the weekly updates, we do have a little bit of a cheat sheet for the week. And there is a lot that's been going on, and something I've been talking about. Every earnings is essentially going to give you more of the truth of what's actually going on, as opposed to all the data that you get that is very misleading, that is very misconstrued in a lot of different ways. And we've seen that, but we all are also seeing a big turn in a lot of numbers starting to reflect recessionary numbers. And one of the biggest things to understand here before we even get started is our GDP is coming down like a rock. Now, this is something, the administration wanted to redefine what GDP was and everything in the beginning of last year. So I do believe we have been in recession for a while. But anyway, they redefined it. But this new GDP that we are on course for is starting to reflect recession numbers. We've essentially dropped from a 2.6, I believe, down to a 1.4. And then now we are looking at the next quarter being negative. So we're actually starting to see that. You're starting to see the Fed going from essentially a position which we were coming in a soft landing to a no landing, and now to a mild recession. Leading up to this week, it is going to be a very, very pivotal week. Just all the tension that's essentially built up to this point. Now, the charts are showing some misconstrued, I think, price action. A lot of people think that the market's going to go back to all-time highs. I don't believe that because of what the current sentiment is. Again, you always have to have the current market sentiment. What is the structure of the market? Not always just a price action. The price action can be very, very misleading. This is why I go off of events, because through my experience, what I've noticed is that you can't go off of charts alone, because events can override anything on your charts. So with that being said, we know the GDP is getting worse and starting to reflect recessionary type numbers. We know a lot of these different companies are still continuing to lay off heavily coming into this week. But we are right in the middle of earnings. And something I talked about coming into this earnings is you're going to have them very strategically placed. Key leaders in the whole market will be strategically placed. We saw that with the big five banks were on a Friday to take it into the weekend in case something was essentially reflected really bad. And then we came into the next following week where we had Netflix and Tesla. Both did not do very well, both showing extreme weakness. And then coming into this past week, we had First Republic. And essentially, the CEO came in, pretty much gave the results, answered a couple of questions, and walked out. Didn't even have a presentation, only for that to cascade throughout the week and getting worse and worse and worse, back and forth, that the Fed essentially was telling them that they have to come up with a deal, that they are not going to let them borrow any money after the 108 billion on top of the 30 billion that was already given to First Republic. And so with that being said, now coming into Friday, yesterday, now that it's a deal between JPM and PNC to essentially buy them out, right? Because they are, again, another failed bank. And to think that this thing is just going to go away, and this backstop, like that backstop is the money that's been pumped in for that backstop is already depleting heavily. And this isn't, and you just had a couple banks, but you see the impact of just a couple banks and what it can do. So being said, this, you have to understand, there was a lot of bank failures back in 2008. There's a lot of bank failures, and then ultimately this is what cascaded into the bigger downfall coming into everything. So this is what we're talking about and where it's kind of aligning into this week. But we did have Microsoft, again, things to point out. Yes, again, set the stage. You have to understand that expectations are extremely low. again, the market has been numb to bad news. So if you put expectations very, very low, of course, if you beat those expectations, the stock is essentially just exploding at this point. You had that with Microsoft, you had that with Amazon, you had that with Meta this week. So that started pushing the market up in hopes that, hey, it's only like a handful. You have to realize this. It's only a handful of stocks that are holding up the market. If you look at all the other earnings, absolutely horrific. UPS got absolutely abolished, right? And you have the big um, corporations that are doing so well, right? You have to look at the other ones that are not, that are essentially the lifeblood of um, the economy, and everything is extremely struggling, right? You even got Walmart talking about closing down stores, Amazon closing it out, down stores, and firing tons of people. Announcing, I think, another 9,000 more layoffs this week, and it's absolutely horrible. And Google in themselves, their ad revenue was down tremendously. So did Facebook. Showed a lot of, even though it pumped, they were losing a lot on ads too. No one's advertising because nobody's buying. These are the things you have to point out, and then also realize that food is exploding as well, right? Like Chipotle had like one of the best earnings we've seen this year or this quarter so far. Because you have to understand that food is a form of entertainment, and the cheapest form of entertainment when you are in a recession. And so these are the things you have to point out, that you're not just going to find anywhere through a data sheet or whatever. You have to think outside the box a little bit here on what really matters here. And this is what's going on. And so let's start looking at the sheet here. There was a lot going on there. I didn't want to write all of that out, but here's some other key points. Banking crisis. The cost of credit default swaps essentially spreads to insure against U.S. bankruptcies. Back in 2008, it was 60 basis points. 2020, 10 basis points, and now it's 175. That's just absurd. That's what I'm saying. The numbers we are seeing are historic because we printed 40% of the money supply at one time. So this is something I've been talking about for quite a while, is that you're going to get more of bigger explosive moves out of what's going on because of what is going on. Everything that's going on is very, very historic. And yes, they say everything rhymes in a sense, but yes, it does. But you have to understand that what used to occur perhaps back in 2008, you have to expand that by 40x compared to what it is now, right? Because you have a much bigger money supply, and things are going to get a lot worse than what they were. And then on top of everything, you have again the administration coming out with the credit stuff, right, and saying that people under 620 credit score are going to get incentives for buying homes. So you're essentially the whole thing that essentially occurred back in 2008, the administration is recreating that now so people can afford homes. That essentially maybe no fault of their own, but should not be having or be allocated these loans, because all it seems like and all it is setting up is to be that what's going to happen is that there are these people that take these home loans that perhaps are getting all these incentives, and you're essentially penalizing the people that do have great credit scores to potentially put them in a very, very tough spot. So they take the hit. So they have to go and file bankruptcy, and perhaps not a BlackRock or any of these other corporations that have just swallowed up all the housing units over the past couple of years during the pandemic. And so now if they need to offload anything, now they have demand. Now they have the liquidity to do so. Keep that in the back of your mind. And so that is the whole reason why I'm thinking that the administration is passing this and allowing people to do this starting here. I believe it's actually Monday that they are allowed to do this and use these lower credit scores to be able to do that. Now let's see if BlackRock or one of these other institutions that are holding all these homes, if they start liquidating or increasing. That's the biggest. This is why you haven't really seen a huge housing crisis, because of the fact that we don't have supply. The supply is extremely limited. But if BlackRock throws out, half of their supply out there and this floods the market with homes, then you're going to get a banking crisis, because then people can essentially come down, 50% of what the price is, because there's just so much supply that it's going to put the seller in a really bad spot. And if the seller essentially was trying to, keep their home as the last, again, people hold the majority of their wealth in their home. So if they need to liquidate their home so they can survive, guess what? Now you're competing against BlackRock. Now what are you going to do? Because they're just trying to liquidate and they don't care. They can take a hit. But can you? And that's the problem. So with that being said, we also had JPM and PNC, which is something I talked about on First Republic, right? They're getting ready to buy First Republic. So you have another failed bank. It's just a matter of time before you get another failed bank. New data shows U.S. foreclosure files jumped 22% the first quarter compared to last year. You're getting tons of foreclosures and delinquencies are on the rise. You just can't think that we are in a new bull cycle, and you have media portraying that we are in a new bull cycle when we haven't even technical wise broken out of any range. And so these are things you have to consider, and you can't fall for this misleading to this utopic view that is not. Again, I'm a perma bull. This is not what is going on here. Like the market is extremely bad. It's not like normally when you have something just bad, like one bad thing, it's okay, well, we can get over this. Now this is like really bad times 40, right? 2008 times 40. What are you going to get? They're predicting another 20% drop from where we're at. That's not from the peak of where we had it last year when we started 2022. So, with all that being said, it comes into this historic week. This can be a very big week. And again, going back to earnings and strategic placement, magically, Apple is strategically placed on Thursday this week after the bell. So, we're going to get monetary policy. We're going to get Powell on Wednesday. And then you're going to get Apple and Shopify. And then on Friday, you're going to get non-farms. And something I've been talking about throughout the week is that non-farms are really going to matter because it's a very, very, very lagging indicator on a recession. If we start getting recession numbers on that non-farms, that is going to be sticker shock that the market's going to price in recession. Now, we'll see. I think ultimately what I am looking for this week out of these events, again, I'm not really concerned about monetary policy. It's already pretty much they're pricing in essentially 25-point basis move. Like it's not going to go higher than that because if we do, we are already breaking banks. We already raised it 25 on the last one, and you have to understand even that again is still very very lagging on its effects. And then so the monetary policy this week, the insurance rates or not the interest rates are already essentially going to be 25, right? Like you can't go higher because you're just gonna ask for one of your big five banks to be broken if you come in at 50 points out of whack. You can't do that. You have to at least go 25 so you can try and essentially maintain some control, some kind of controlled chaos is what you're trying to do. And so coming in lower than that, obviously you can't because inflation is still high, sitting at 5. Again, you're trying to aim for that 2% target. You can't lay off rates right now. There's not enough, right? And every time you start coming down, more people are purchasing, so that demand keeps coming back again because you have another thing that's fighting against everything. Not only Powell and the Fed, but people are scared about the dollar and BRICS, and understand that people want to purchase assets because if the dollar fails, at least they have some sort of asset, whether that's gold or silver or perhaps a new home, whatever the case is. They want physical assets that they're going to be actually be able to turn around and sell for whatever the new currency may be. So that's something you have to keep in mind, that there is a lot going on. And this is what I'm talking about. Normally you have just one thing that could be the issue, but now there is just so much breaking all at once. It could be any one thing. And that's kind of what we're waiting for. We know what the end game is. Recession. Once a recession gets priced in, we are okay to pivot. And then we'll see the rate cuts. Then we'll see perhaps in the next year another quantitative easing going into an election year. So this is essentially what I am portraying over the next 6 months, right? We've made it through to this point. We were waiting for something to break for the past 6 months. We finally got that thing to break. Now we're starting to see it cascade into more and more things. So again, non-farms, biggest key highlights, monetary policy, not so big for me again, but I'm really watching Powell. I want to see if Powell talks about a recession. If he starts talking about a recession, you're going to scare the market. So he won't just say a recession, he'll say a mild recession. They've already kind of greased the skids on that, because just last week they were talking about, not this past week, but the previous week, they just started talking about a mild recession, when before it was a soft landing, then a no landing. Now it's a mild recession. If Powell says mild recession, aka it's a recession, then you could start pricing that in, because we haven't said anything about that till now. And that could be the sticker shock that essentially is the gut punch to the market. And so this is why it is, risk management is huge, because that is not priced in. We've been battling inflation to this point in a pivot. It had nothing to do with the recession till that battle was over. And again, it's a very long battle. As you can see, it's been over a year and a half, and we're continuing to fight that battle. So upcoming events, we got monetary policy. Like I said, next week we got the new core. That's going to be really interesting to see, because gas has been coming up. Also, it is not only gas, but food and everything is still extremely high. So we were trying to really determine if this is coming down and at what pace it's coming down. Again, if it starts getting real, so we had a huge drop in the last one in some aspects, but it really depends on how you look at that essential. How you look at that report, right? Again, you have to remember that this report's already been refined and removed a year. So you're going to see big drops in inflation because that year was removed. So with that being said, we will see what happens coming forward, but that is next week. So it's something we have to look forward to. But ultimately, monetary policy this week, more so just Powell is what we're watching this week. So upcoming earnings, again, we're starting to get out of a lot of the big ones. This is why it's very funny that Apple was pulled out of all the big techs and put into, and the reason that is because it holds like 7% of the index. You have to realize that it has a lot of weight. If Apple does bad, Apple alone could pretty much bring down the market. And so Apple, again, very, very key to watch on Thursday after the bell, but you'll have monetary policy and all that before Thursday. So something may trigger it to that point. Again, if there's starting to be a lot of recession talks, the Fed has been on hiatus all last week. They were in a blackout period, so we didn't hear anything from the Fed last week. Now the Fed, now that they have their meetings, you're going to start hearing a lot from the Fed this week. So you have to keep that in mind on top of all the banking stuff. Again, I'm recording this on Saturday afternoon. A lot can happen between now and Monday's open between banks, or maybe another bank is announced, or perhaps another two banks that are starting to fail, right? And so those are really big concerns coming into Monday. This is why I'm saying you have to be dynamic in any market that you're in, because it can change very, very quickly on any piece of data, any piece of event can change things, right? Even if you want to look at like 9/11 or something like that, it was an overnight event and the market just crashed. I'm not trying to say that you can never not invest, but you have to be aware that events like that happen. That's why they call them a black swan event. But right now, there is just a lot of problems that aren't really typically black swan. If you watch this channel or listen to this channel, you know that I try to point out as many of these things as possible. If these AKA black swan events in the real essentially the real world perspective, if they hit this utopic perspective, that's when fear comes in the market. That's when crashes happen. And again, it's not all the time, but it is very much a strong possibility what's currently going on. Again, you have to take out of the whole pandemic thing, right? That was a complete left field, like once in a century type of occurrence. That doesn't count. The market was getting ready to essentially come into this crash before that even happened. So just keep that in mind. And then you have this random, disease that came in that it just wiped out the market quick. So you have to understand that there's a big difference between the two. So aside from that, Tuesday we got AMD, Qualcomm, and Shop on Thursday. These are ones, again, there's still going to be tons of earnings toward all the way to the end of the quarter. But again, once after all of these big earnings, big industry leader earnings are done, the market essentially makes its move from there. Something to keep in mind is, again, that Tesla, it's been about 2 weeks since its earnings. So it's got about another week or two before it potentially finds its bottom. Not saying that if the general market sentiment gets really bad, we start pricing a recession, it could definitely take Tesla down very quickly, as tech will fall essentially before anything else at that point. So keep that in mind moving forward. So watch list. Again, this is more so just it's not so much a watch list as of right now. It's something I'm going to talk about over the past year. I've used this more as a kind of a gauge just to read options, what they're pricing in on the options. SPX has bumped up a little bit since last week. Tesla has dropped a little bit. BA has dropped a little bit. Banks have dropped a little bit. So now that a lot of the bigger earnings, Apple will price in quite a bit because it's actually the week of their earnings. But you realize that after earnings, after big events, if there's typically a big event, you'll see that within the SPX priced in. If there's earnings, you'll see that priced in within the individual stocks. And so that's why I put those up there. And I do change that once we are actually in a normal market and not this crazy wild cycle market. So I try to at least list the industry leaders here because that's important to watch what is being priced in. And then aside from that, what is expected, right? And I think this week will be a very pivotal week. That these are the kinds of weeks you can take advantage of with options. And something I've talked about many times before is you have to know what the average is on options on those particular stocks. This is why I say always trade the same things over and over, because you know what the average is for those stocks. And then if for some reason an event occurs and you get a week like this week, right? Like there's not a lot priced into the SPX. And normally when there's a big anticipated event like the SPX, we've seen it up to 120 being priced in. So that just gives you some sort of perspective as opposed to the average of like 65 that it typically sits at when there's nothing really going on. Now, after this week is essentially, you sell in May and go away, because liquidity is normally very, very dried up around this period. And so it might drop down to 55, and that might be the average for the next 2 months. These are things you have to keep in mind of. And the longer you are in the market, the longer you can see these things and understand what's actually going on. So with all that being said, we got through the sheet finally. That was long, but now the technical side will be fairly quick, as we don't really have a lot to go over here, but it's still very insightful to see what's going on here. So let's see, it's SPX here. This is what I've been talking about, people saying a new bull market. We haven't even broken out of this range. The 4,200 is essentially our ceiling. We need to break that. Can we break this week? Even if Apple does good and for some reason everything essentially falls in line, we break up, I could see us going potentially 4,300. That's only going to break us up into the next range. I think any kind of top side is very, very limited, as you are very much concerned about a recession. You're hearing more and more data. You're seeing more and more data. You're hearing more and more people start talking about recession. Again, it comes in slow, then it starts hitting hot. So that's, again, same like the pandemic. It came in very slow. The news and stuff was coming in slow, and then all of a sudden it came in hot, and then the panic set in. Everything, all these big events like this, if they can see it, it is very much this slow moving thing that you can see. And that's why I have this channel, is to try to depict those slow moving things that are transitioning into that utopic view. And then when it hits utopic view is when you get crashes or you get some sort of big move. Those are the times you try to take advantage of the market, is when that does happen. But again, if you always have risk management in place, then it's not that big of a deal. So with that being said, this is what we're looking at this week. So we need to break the 4,200. Otherwise, again, we came all the way down here and then ended up breaking back up by the end of the week. So again, we still are in earnings mode. I think once we get past this week, you'll officially be quote unquote out of earnings mode. Now on a normal cycle, again, something else you always got to pay attention to: what are the normal cycles? In a normal earnings cycle, after all the big industry leaders have essentially their earnings, you can get about a week after that to where it will still run. You have to be mindful of that. That's in a normal cycle. We are not in a normal cycle. We've seen a lot of weakness. We had some heavy selling, obviously this week, especially with First Republic. And then all of a sudden it went like Thursday was no news on banks. And all of a sudden Friday at the close of bell, it's like, oh yeah, First Republic, we're going to lose it. It's going to fail, right? So I wouldn't be surprised if we get down and actually get rejected off of this coming into Monday and start selling back down to the 40-50 mark coming at the end of the week. And then again, if non-farms play out, if more recession talks, that could be what breaks us and then sends us back down to the 3,800. Again, depending on what events occur along the way. This is what I always talk about is timing. If the timing starts aligning where there's more recession stuff, more bad things, which I'm expecting over the next 2 quarters, again, it's not saying we can't bounce out of that and start finding our pivot. But this essentially, the next 2 quarters, I think, are we're going to lead us into Powell having to pause and to potentially start cutting rates. So potentially start cutting rates sometime in Q3 is when I'm thinking. Again, depending on the series of events, if we start getting a lot of bank failures, he may not even pause. He may just start cutting rates. It's something you have to consider because at the rate at which he's applying these rates, the rate at which things are failing, this thing could go under very, very quickly, very, very fast. And then if that panic again hits this utopic view, again, none of this is going to matter. None of these technicals are going to matter. It's just going to straight butter through every support like we've seen it happen. And something that I think is very much a strong possibility because you have to understand we deal in possibilities in any market. This is how you want to take advantage of markets. You have to deal in possibilities and probabilities of things. And so this is what I essentially talk about on this channel. So with that being said, let's go ahead and move on from there. Let's look at Bitcoin here real quick. So Bitcoin, again, that 31K mark is pretty much the ceiling, much like the market. I think, again, this is going to reject and start selling. This move in itself is pretty much telling me that essentially crypto is not essentially detaching from the market or decoupling from the market. I think we got a long ways from that happening. Again, you have to understand that crypto is not just going to detach and to just do its own thing. Even if it does detach, you have to understand like gold and everything else, right? It depends on essentially the sediment of the market, right? Like I think you'll see it pumping, just like everything else. I think it'll get more stable at some point, especially Bitcoin itself will act much like gold, be much more of the stable cryptocurrency. And then obviously you'll have all your other cryptocurrencies that will act in its own fashion from there. But we'll see what happens here. I think, again, Bitcoin is going to, once a recession starts getting priced in, I think Bitcoin's going to be right there with it. And something I've pointed out, again, on the monthly is this is essentially just a dead cat bounce is what it is. And so I'm looking for this thing to turn and drop and make a new low on this low here. You've had a massive drop with hardly any pumps. Now you get it. That's a very technical dead cat bounce. So I'm looking for this thing to drop even lower, potentially in this level 8K mark, potentially. We'll see. We'll see how long it does last. Like I said, if we do have a recession getting priced in and we make new lows, which I am anticipating, it's not saying it's going to happen. But if we do make new lows, I don't think it will be for very long. I think the market is very well educated in the fact that after a pivot that, again, we'll have some big boom cycle. I think there will be another big boom cycle. But the problem is you have to let normalization occur first. And the people that are trying to price that in before it's actually here are going to get hurt. And so we need to let that normalization happen once the recession's priced in. Then, like I said, everything I think will maybe consolidate for maybe a month-ish, and maybe 2 or 3 weeks, and then that thing will just start shooting up. So again, I'm watching this potential dive very, very closely, as this will be my main entry into everything on this dive and recession. So whether that happens this week, or if that happens in a couple of weeks from now, or a month or 2 months from now, I believe in the next 2 to 3 months it's really going to have a major impact on the market, and we're going to see a bottom, and then a true bottom at that point where the market recovers. So I'm not saying that the economy will recover. The economy will be bad for the next couple of years. You have to expect that. But I think as far as like the worst of all things will happen then. And you have to, again, that's all based off of what's currently going on in the world, right? Macroeconomics. I think once you get a hard reset on everything, which we haven't got a hard reset, things are still very, very expensive. That's why I keep trying to reiterate, like it's not, you can't go off of what the technicals are saying, because none of that's occurred yet. Like it is occurred, but it's not reflecting on anything, and it's getting worse. So once the reality again of the situation hits the utopic view, then you'll get it priced in, and you can't price that in, right? Like I think the severity of the situation isn't fully seen just yet. So gold again looks just like recession gold. Looks like it actually wants to break out here. So really kind of watching this 200 level here on gold. We'll see if this does break up and start ripping up. Moving forward, again, the dollar. I haven't really talked about the dollar because inflation just in general, like the dollar is going to be all over the place. But considering everything that's currently going on, I think the dollar could potentially explode here. It is sitting at support here, roughly at support here. So this thing could potentially start ripping back up. Potentially, we'll see. Again, there's a lot of other things, but this is why I haven't also been watching the dollar, because now that we've had bank failures, it's not the topic of my conversation anymore, right? Like we moved on to the final stage, and that is price in a recession where things can actually start recovering. And then at that point, again, you have to understand that things shift weight. There's certain times when certain things mean more than other times. And it's not, yes, it does have, to an extent, it always matters, right? I'm not saying it doesn't, but what I'm saying is there are certain points to be watching and certain points where you can watch on other different things or watch for particular events that are occurring that have more weight. And if we were in a normal market, no one would care about monetary policy, right? Like it would be a little blurb on the radar and that'd be about it, right? Like earnings would have more of a play on everything and not as less of a play. So that's why you have to keep in mind what a normal market is and understand that it's, again, dynamic and changing all the time. So let's take a look at Tesla real quick. Again, just like Bitcoin, did cap bounce and we're starting to sell. We'll see if this thing can break below here. Needs to break below this 51 level. Again, you had massive selling. You got a little bit of a bounce. Retest. We'll see if this thing turns back over, fills this gap here, and down to the 140. Again, I think just with everything going on, I think that this thing is going to come down pretty heavy. I think we're going to at least see close to 111 potential here. Again, really depends on how heavily the market sells. The market really starts selling heavy, this thing could go even lower. I don't know. But it is Tesla, and I think anything below essentially 140, in my opinion, again, on financial advice, or even 120, is going to be an automatic buy because at that point, it won't stay there for long. Just like Bitcoin, I don't think will stay there for very long. I think you might have a window of a week or two where you could buy, and that would pretty much be bottom, and then it would rip right out of there. So again, we will see. Once we start getting more recession concerned and heavy selling, we see from that point. So again, if you want this thing to continue up, it does have a gap to the upside. So this thing does need to break the 166. Again, your ceiling is at 177 if it decides to run this week. So that's the way to go if you want to watch that. Palantir is another big one I am watching. I want to start this thing is consolidating very nicely. If you haven't noticed, I can zoom it out to the week. This thing has been consolidating very nicely, essentially between the $6 mark and the 8.82 mark. So really kind of just going to start DCAing in on this one as well, especially when it starts getting to anything essentially under $7. That being said, any kind of DCA move, you have to be able to hold it for a longer period of time and understand that this thing could start ripping or can fall all the way down to $3, right? Or even zero. Anything can go to zero, but you have to understand that you have to be prepared if this thing keeps selling. And it's a very strong, again, we deal in probabilities here. There's a very strong possibility if recession kicks in, this thing could really start selling heavily down on this thing. So really watching these next levels on Palantir, as this is one of the main ones I want to be grabbing on this leg down. So watching the key level at 725 and then really watching it heavy here around that $6 mark, 625 mark. And then again, like I said, I think this could potentially break and sell potentially a little bit more. How much, again, really just depends on what's going on in the market. So really, again, watching that and then understand that it does have earnings here coming in on the 8th. So not this week, but next week they're going to have earnings. That's something else you need to keep in mind. Let's see, BA, again, just chopping. Don't really want to go over this one. If you watch this channel, it's been essentially trading this level. The only thing I could say about this is that there was going to be a huge move in this. You have this huge gap move here, something I pointed out in Tesla, something I pointed out in SPX. BA will eventually come back down and try to fill some of this gap, at least roughly probably around the 132 or so, 140 maybe. So roughly around there. Even if it's making a higher low, you want this parabolic. You don't want parabolic moves like this with no touchbacks. So my probability would be that it will at least come down at some point to some level around here, around the 150, before this thing starts getting bullish again. Again, this 215 has been a solid wall. So really kind of watching that. JPM, again, same thing. Like I pointed at BA, Tesla, and SPX. This gap fill is going to eventually happen. It's stuck now between here because of earnings. Obviously, it's going to do very well because all the depositors went to the number one bank as of right now. So we'll see what happens here. But really watching these two levels here, roughly the 143. You want this to be bullish. It needs to break out over that. Otherwise, if it does break but down below here, we'll be right back down here at the 123. Again, break below that, which I'm expecting it to do, and try to fill some sort of gap here, at least down in the 111. I think is a very strong possibility. We'll see what happens. Again, you're pricing in a recession. You get fear. Levels are hard to judge with fear because fear, it doesn't matter. It can just sell. It may straight butter through everything, which we've seen. If you've been through the pandemic, you've seen that support's just butter. It doesn't matter. Recession fears, same thing, right? It's fear is fear. There's nothing you deal with that, and essentially you just fall and get a crash, right? So with that being said, GS here, again, just kind of chopping. It needs to break out over the 345. Again, there's more bank concerns. This thing might just be retesting and then ready to rip back down to the 293, strong possibility. Bank of America. Again, it looks like a retest. Let's see if this thing continues to drop. It really needs to break out over the 31 mark. If it can't, this thing is potentially going a lot lower. So if you made it this far, I do appreciate you. This one has been a long one. There's a lot of information. It's a very big pivotal week. There's a lot of things I touched on and pointed out that you really need to be watching this week, as it will be a big week. It comes down ultimately to what Powell's going to say. We already know it's going to be a 25-point basis move. If that changes, that will be shocking. So that could be something to watch for, but I don't expect it to change. I expect another 25-point basis move. Again, if we come Monday to Wednesday, if there's more bank closures or something like that, that could lead to a pause. That's a strong possibility too. There's a lot of things that can happen between now and Wednesday. So if that does happen, we get a pause that can change the dynamic of everything very quickly. Then it really depends on what Powell says. But I'm really highlighting what Powell is going to be saying. I'm really looking for any recession talks. Then on Thursday, we have Apple, and now you have one of the biggest hitter in the market. If they do bad, it could fall pretty heavy, and you have to kind of look more at Tesla, as they get a lot of their revenue from China, and Tesla did bad because of China. So we have to see if that's reflected. Although they have a lot of other things too, we'll see what happens there. Like I said, Amazon and everybody else did well. Apple doesn't really have any kind of like cloud space, though. That's the one thing that's been saving these big tech companies is services in ChatGPT. And with that being said, is that's not really going to be reflected in Amazon or Apple, right? They could be talking about ChatGPT, but they haven't really established that, right? And I understand that the cloud space supports a lot of that technology, and Apple doesn't have that. So Apple just sells a lot of products and has some other things, but we'll see what happens. It'll be a very interesting one to watch, and it will hold a lot of weight. As you can see, this thing can cascade into something really bad, and then going into Friday, if non-farms start reflecting recessionary numbers, we've had a lot of jobless claims that have had some big drops. You just have not. There's been a huge difference on non-farms. Once that starts reflecting, you're going to get some panic. So with that being said, this thing can, again, cascade into something huge by the end of the week. After this week, we'll know where we can go from here. And then we might just be sell and go away, or maybe we just start selling off heavy. In my mind, after this week, earnings is done, right? And then the market will make its decision and go from there. So with that being said, if you made this far, go ahead and drop a like. Until next time, I'll see you guys later.